Real estate accounts for 25%, that is, a quarter of China's economy. And China is the second largest economy on the planet. And it is one of the largest trading partners with most countries on this planet.
As investors are starting to fear that we could be seeing another major debt crisis in the already very troubled Chinese real estate market.
So, when there is a problem in the real estate sector of China, it is not only a concern for China, but it is a concern for the globe. In this video, I will tell you how the real estate bubble was formed in China and what does real estate crisis in China actually mean. My name is Kanak and welcome back to my channel. Subscribe to my channel for interesting content from the world of finance, investing and economics. The real estate crisis had its roots in 2005. In 2005, the local governments in China realized that they could boost their local economies by investing in infrastructure development. So, in order to fast-pace the growth of the local economies, the local governments started to invest heavily into infrastructure development projects. So, in order to finance these infrastructure development projects, the local governments set up a separate entity called Local Government Financing Vehicles. The purpose of this entity was to borrow money from investors and to invest in the local infrastructure development projects. By investing in infrastructure development projects, the local governments would not only create employment but also generate revenues by selling the developed land. When there is development on a piece of land, its value appreciates. From 2005 to 2011, within a short span of 6 years, the real estate values in China multiplied by 3 to 4 times. While the prices of real estate was increasing, at the same time, the amount of debt was also increasing. Similar to local governments, private developers such as Evergrande, Country Garden and so on also started to borrow money in order to invest in infrastructure development projects. The rise of property values along with the debt continued until 2020. In 2020, China's central government realized the problem of massive debt in the real estate sector. Now, in order to limit further borrowing of the real estate sector, China's central government implemented 3 red line rule: their debt to cash, debt to equity and debt to assets. However, by 2020, it was too late and the train had already passed because the real estate sector had already amassed a massive amount of debt. And on top of that, in 2020, there were 3 major events that negatively affected the real estate sector of China. The first was COVID-19 lockdown. The second was government's regulation to control rising house prices. And the third was declining population. All these 3 factors combined together resulted in a drop in demand for real estate, led to the decrease in prices of the real estate. By 2023, Evergrande had amassed a loss of $80 billion and it had $300 billion of debt on its balance sheet. Country Garden, the second biggest real estate developer, had posted a loss of $6 billion by 2023. So, declining revenues, increased losses and massive amount of debt led to the default on loans by these major real estate developers in China. This series of default on loans by the major real estate developers in China is called the real estate crisis of China. As per the latest reports of IMF, the real estate crisis is not yet over and it is still unfolding. On the surface, the real estate crisis of China seems similar to the 2007-2008 housing bubble crisis in the United States. However, the magnitude of global impact of China's real estate crisis is yet to be seen.